Hello, good morning and welcome to ET Now. You're watching Buy Now, Sell Now with me, Varun Hirimat, and along with me, Karunya Rao. Karunya, why don't you get us kick-started on the headlines this morning?
Of course, the top headline would be how the markets are faring, especially the benchmarks hitting a record high. Nifty is firmly above 13,500 and it's energy and metal indices which are leading the gains today.
Most definitely, Karunya. It's all about the metals, and we had Ajay Srivastav this morning as well on the channel saying that metals must be in your basket, whether you look at a Hindalco, Nalco, wherever your interest lies. But iron ore futures are currently at an all-time high, so do take a close look at the metals basket today.
Right, keeping it with the metals theme, we also interacted with the management of JSW Steel earlier this morning. They expect demand momentum to continue going forward, and they aim to become a 45 million ton steel company in India. So they've given us some forward-looking commentary as well that's keeping the stock very much in the limelight.
Okay, and zeroing in on Pharma again today, we have the top Nifty gainer, Cipla, which has settled a cancer drug case in the US, and now Credit Suisse is hiking the target. We might see more brokerage upgrades coming in as the week goes on. Some other large pharma companies have also settled similar suits in recent times, and in general, it's quite well received by investors. So Cipla in focus today on the back of that.
Meanwhile, Burger King saw a whopper of a listing. It nearly listed at an amount that was almost double to the issue price. So stellar listing gains coming in for this Dalal Street debut, a stock you need to watch out for in today's session.
That's right, almost 100% listing gains for Burger King, and also that's got Jubilant and Westlife in focus as well. It should rub off on their stock prices respectively. But talking about stocks that are doing really well, 52-week high for eClerx. The company is to buy Eclipse Global at an EV of 34 million. So that's debt plus equity. It's got that counter in focus as well this morning.
All right, so those were the top headlines that you need to keep on your watch list. Moving on to the BNSN Quiz Connect. This morning we asked you which of the following pharma companies has the highest TTM EBITDA margins. Your options were Suven Pharma, Divi's Labs, Laurus Labs, as well as Dr. Reddy. So you have to give us your right answer from within these four options. You have still time until 11:45 to send us your replies. You can log on to Twitter, follow our Twitter handle ET Now Live, and post your answers in the comments section.
Let's take a bit of a closer look at the markets this morning, and while the breadth is fairly positive, we have again once more a trading session when we're trading at the lifetime highs. Nifty's at 13,521. Needless to remind you that the Dow futures this morning were up nearly 200 points, and then the S&P and Nasdaq futures were also up 0.5%. So last week all the major US benchmarks fell off a bit, so we saw a good recovery, and that's what's led to a fairly decent market for us this week, at least to kick it off. Now Bank Nifty is out of the headliners, one of the better performing indexes, up 0.3%. Auto, unfortunately, today is losing, taking it on the chin, a whole 1% down for the auto index. Mid-cap index showing that the broader markets are continuing their role along with the benchmark. So that's up nearly 0.5%, doing pretty well. And overall, like I said, the Nifty is pretty much flat with a slight positive bias. Market breadth, 31 advancing, 19 declining. In terms of what's really leading the charge, we already spoke to you, Cipla, on the back of that settlement in the US courts, up nearly 4% in trade. ONGC, it's been on a tear, 75 to 100 in 1 week. Again, one of the top gainers today, 3.5% higher. Obviously, crude prices are helping that. Coal India up 3%, IOC up 2.5%, Grasim up 2.3%. On the losing side, we have a clear trend. It's motors and it's IT. So you have Hero Motor and Eicher, both are down almost 2%. Wipro and Techem, both down 1.5%. We then have HDFC Life, which is a name we don't really see in the top losers list too often, but that's also there today. So that just gives you a slight flavor for the markets, and of course we'll be revisiting that over the course of the show. But let's also get on the BNSN stock cloud. 10 stocks that are active for various reasons, and this morning it's quite an exciting cloud. So while it's coming up on your screens, we have Cipla. And the reason we're flagging off Cipla so many times in the beginning of the show is that when these kind of things get settled, it usually translates into a huge opportunity for the respective company. We saw it with Dr. Reddy's, now we're seeing it with Cipla. Burger King, obviously, that now has debuted one of the best IPOs again of this year, nearly 100% gains, and we'll see how it closes out the day in trade. We then have a Delta Corp which received permission to plan a new resort in Goa, which will also have a new casino, so that's got that counter in focus, and perhaps that's what explains the rally we've seen in Delta Corp recently. We then have some reopening stocks like an IRCTC, we have a KEC, a JSPL, a JSW Steel. Metals are really active. We spoke about that in headlines as well, so JSPL and JSW Steel fall in there. We have a Central Bank of India, as PSU banks are also in focus. We have a Panacea Bio this morning as well. And then finally, we also have an IRCTC from the PSU pack. And then we have Coal India as well. So these are the 10 stocks we'd like to flag off, and do keep an eye on them as we head towards the middle hour of our trading session.
Let's also touch base with Kunal Bothra and Shahina Mukaddam to talk more about their stock ideas and viewer queries. Kunal, coming first to you. We were just kissing distance from 13,600 levels this morning. What is your sense of the rally that we've been witnessing over the last couple of days? Is the Santa rally going to sustain, or do you think, or do you foresee any kind of correction coming in before we hit Christmas, perhaps?
So, good morning, Karanya. I think it's been a fabulous last 2 months for the indices. We've, risen by more than, I think, 1,500 plus points on the Nifty itself, and, more than 3,000 plus points on the Bank Nifty. So, no complaints in that regards. And, with every, passing week as well, we are seeing, incremental strength coming across on both the indices. So I think that's, quite positive to take note of. Now, yes, there is a concern that the market is getting a bit shallow because of the intraday volatility, what we've been seeing or being accustomed to since last week. So, whether the markets will go through a corrective phase, I think that will probably depend on how the larger scheme of things happen across the globe, because we've not seen a major correction panning out in any of the bigger global markets as well. So whether it's Asian markets or whether it's our markets, we've not seen that happening. So which is why I believe that our markets could continue to be poised pretty I would say in a consolidation to slightly a positive bias kind of a manner. Yes, you will have those intraday volatility dips like what we've seen the first half today and what we saw even on Friday second half. So I think till the time that happens as well, even the intraday traders have something to take note of. Now, in that regards, I would suggest a couple of buy calls, expecting that the market bias will still remain positive. So the first one which I'm suggesting is a buy in Raymond. Interesting chart on the short-term aspect. The stock bouncing off from its short-term moving averages from the daily time frame, trading at approximately around 330 mark. I believe Raymond could be a stock from the mid-cap space, which could move up higher significantly from current levels. 350 is where I would place the immediate target. Stop loss could be kept at 320 approximately. Would term this as more of a moderate risk idea. And the second would be about LIC Housing Finance. This is a fresh breakout stock on the daily charts. We've seen 360, 362 acting as a hurdle zone for LIC Housing, and the stock today seems to have crossed this hurdle with a decent enough volumes. Of course, during the course of the day, the volumes can get a bit more stronger for LIC Housing, reinstating the kind of breakout the stock has seen today. So, would suggest a buy on LIC Housing as well. Targets of 380 and stops at 354.
Okay, thanks for that, Kunal. Shaina, we'll come back to you in just a second, but we have my colleague Karishma on the phone right now, and there's an important story that needs to be addressed. There could be a higher duty on edible oil, and a lot of this information is coming out of the Food and Agricultural Ministry. They've been having discussions. But Karishma, hi, thanks for joining in. Could you walk us through what the possibility or probability of this higher import duty is? And is it being done, obviously, to protect the local producers? But how soon could we see this happening?
Well, right. This has been, of course, a decision that has been in line with the government for long. But again, in November and early December, there have been important discussions held between Food and Agri Ministry on oil seed mission. If you remember, ET Now was the one who broke the story on how government has been at the top of the agenda regarding this. And now we are picking up that they have been discussing on hike in import taxes. They are considering to hike import duty on soybean oil, sunflower oil in particular. In fact, they're considering a likely hike of 5%. They are doing this to, of course, go ahead with domestic oil production in North India. Let's not forget that India annually imports about 15 million tons of edible oil, and it takes about almost 35% import duty. So this will be a really greater step in terms of cutting down of the extra cost and rather putting this cost in the Atmanirbhar Bharat initiative of producing edible oil in the country.
All right, Karishma, thanks much for joining us with that update. Once again, back to buy now, sell now. Shahina is also waiting by. Shahina, morning. What are your stock ideas for our viewers?
Yeah, morning, Karishma. Hi. Basically, it's again linked to the story that you just did on edible oils. I think the domestic play, Marico, which is in coconut oil, and you have strong brands like Saffola and vegetable oils. There, I think with higher import duties on palm oil, and so the government is trying to manage the duties in such a way that the domestic production is optimized as well as it is available at a reasonable cost to consumers. And as we have seen in the last couple of months, the prices of vegetable oils have actually been on the uptick. So the company to benefit the most, I think, would be Marico. And Marico has been showing very good volume growth. We've seen a double-digit volume growth in the first quarter, and I think it will continue going further into the next couple of quarters, and especially as we see consumer demand again picking up. Valuations are not expensive. It's just about 35 times FY22, especially considering the fact that, in the food brands, the ones that they have introduced, they have got a very good growth target in place. They're talking of something like 500 crores of revenue coming in from that particular segment over the next 1 to 2 years. So it makes a good investment bet for the medium to longer term. The second one again is in the FMCG space. I'll go with the Britannia. We saw very good numbers in the second quarter, especially when the rest of the industry was other industries were not doing well. At the same time, I think a large part of this strong performance, both in terms of turnover, in terms of EBITDA, is likely to continue. The last quarter, we saw EBITDA margins go up by almost 380%, 380 basis points to 20%. Now, I think while there may be some softness in this because raw material prices are going up a bit, I think there is enough levers in the hands of Britannia to manage their costs in terms of advertising costs, operational costs. So I think valuations which are slightly more expensive than a Marico, at 45 times 1 year forward, I still think it makes a good bet after this period of consolidation.
Shaina, both quite interesting picks, Marico and Britannia as well. So thank you for sharing that with our viewers. Let's now get on board our queries. And we have Kishore from Surat, who's written to us, bought 500 shares of Ashok Leyland at 43 rupees per share. Should I hold or book profit? So Kunal, coming to you first, Ashok Leyland, obviously one of the worst hit companies in March and April, now looks to be on a pretty good footing considering that, the reopening and the rebound is pretty much here. What do you think? Could one potentially even add to Ashok Leyland at current levels? Should you definitely hold? What should you do?
So I think the viewer can hold on to Ashok Leyland. I believe that on the short-term charts, the stock still looks attractive. I feel that the investor has bought at the kind of one of the lowest price. I think 40.43 was approximately the bottom end of the curve for Ashok Leyland in the month of March sell-off. So I think from there on, I think it's been a fabulous return for the viewer. And the long-term charts for Ashok Leyland are also very strong. So if you look at the long-term charts, and I'm talking about the last 10 years, there is a rising channel pattern for Ashok Leyland. The stock managed to come back when the correction happened for the stock at 40-45 levels. The stock happened to manage to come back to the lower end of the support channel of this huge rising channel pattern, and it's now continuing to move up higher. So if that is the synchronized stock trend which could probably play out over the next couple of years, then it's a very strong likelihood that the stock can break even its all-time high levels over the next couple of years. So I think because of the buffer the investor is got because of the buy price, I believe that the investor should wait on to the stock price and at least have a time frame of another 2 years, because if the stock price trend plays out the way it has been doing in the last almost 5 to 7 years, then I believe that the stock could probably head back even to that 150 plus mark over the next couple of years.
All right, Kunal, thanks for that. Let's move on to the second email query. Sameer Ghosh writes to us from Mumbai. He's bought 1,000 shares of JSW Steel at 140 rupees a piece. Wants to know whether he should book his profits or continue to stay invested. Already his investment has more than doubled, Kunal. What would be your advice at this point?
Well, I for one have been a big advocate that the metal stock rally is here to sustain. It's a huge rally which could probably be playing out for the metal stocks. And I think for someone who's not bought, assumingly, I think should be looking to buy these metal names. The two top names which you keep discussing, JSW Steel and Tata Steel, and of course the viewer has bought it at a much lower end of a price curve. I think these stocks have just about remained more sideways over the last 5-7 years. Yes, there have been big price upticks for JSW Steel and Tata Steel in the last 7-8 months. But when you try and compare it to the overall chart patterns over the last 8-10 years, these stocks have not gone through those potential breakouts on the long-term charts, which I believe this time these stocks will try and break out. So I believe JSW Steel, and if you can probably add even a Tata Steel at current levels, these could be very attractive bets. You've bought at much lower end of the curve, and I don't think that if you're in a hurry, then it's a separate thing altogether. Or if you're in some need of money, then it's a separate case altogether. But if not, then I believe that you should definitely hold on to your investments on JSW Steel. In fact, if there is a possibility, you can even add stocks like Tata Steel on dips.
Okay, great. Thanks for that, Kunal. If we have Shaina back with us, could we get your take on both these stocks, Ashok Leyland and then a JSW Steel? Okay, it seems we're having technical difficulties with Shaina today, so she's unable to express her view. But while we wait for her to possibly catch up with us, market veteran Ajay Srivastav says that he sees a select pocket of value in PSU stocks. He also says that there'll be ample rush of funds in the fin space very soon. Let's get you a slice of that conversation.
So financial as a space, and that's again, we have to look at what the RBI governor is saying. He's going to support it. He's going to give LTROs. He's going to give money at the cheapest price to the bank, who in turn are churning out AA bonds at 9%. Where in the world can a business you get where you're guaranteed raw material, which is money, at 4%, and you can easily lend at 8%? Now that's, so you just got to be there and not be stupid about it, and you make tons of money. So financial space is going to make tons and tons of money, and inflation goes up. They will make much more money because you will find that the bond prices and the loan rates will go up faster than deposits, which are all locked in 1 year, 3 year, 5 years, whatever the numbers are, people are locked in. So banks are in a beautiful space given the RBI stance, which they have been in the 5 years. NBFCs, of course, because if the windows open for banking licenses, I think 4 or 5 of the NBFCs will definitely go to that. We already know the Aditya Birla Capital has brought in an ex-banker to head their company, global company, which gives you a pointer. So you could get in early there as well, perhaps. And of course, Tata would like to have a bank, definitely would like to have a bank. So I think the market of NBFC is about to perk up, not only for the reason of banking license, but also for amalgamations. As banks want, as say, for instance, Aditya Birla wants to be a bank, they will start to get 2-3 companies together, amalgamate, create size, maybe even buy up a smaller bank and get entry into the banking faster and so on. So I think the M&A market is very exciting for NBFCs at this point of time. Banks, don't lose sight of it. You got the big governor sitting for them, and he'll make you returns. So don't worry about banks. Keep adding, without a worry.
Welcome back. You're still watching Buy Now, Sell Now, and it's time to talk about some individual movers in trade. You have Cipla, which is the top performer on the benchmark Nifty 50 index, gaining in the excess of 3.5%. Pankaj is here to talk about Cipla's cancer drug settlement and the updates associated to that. Pankaj, take it away.
Well, it's one of the big blockbuster drugs that they have done a settlement. One would come out and say that Dr. Reddy's has done it earlier. Now it's Cipla. And before that, of course, Natco did it. So it's the fourth settlement that we are talking about with the innovator. But nevertheless, when we just talk about this number, everybody has got a market share that they will get. Post March 22, they can launch this drug. The details of the settlement have not been given as they are confidential at this point of time when they have signed this particular settlement of the cancer drug with Bristol Myers Squibb. Now, when we talk about this, the initial estimates are it could be close to about $250-300 million in terms of NPV, which could be a very, very large offering for Cipla. Remember, Cipla has been trying to make its business into the US, and that is something which probably makes it move up the value chain as well for Cipla versus some of the others like Dr. Reddy and Natco, who have been decently big on the cancer drug as well. Most of the street has come out and maintained their positive stance, saying that this comes in as a positive surprise. A few like Credit Suisse have increased their target to 885 rupees, maintaining their outperformer on Cipla. In fact, in an exclusive interaction with the management at Cipla, we got a chance to speak to Kedar Upadhyay, who is of course the global CFO of the company, on this settlement only. Let's hear out what he told us in this exclusive interaction.
The settlement with Celgene of generic lenalidomide ongoing para-4 patent litigation, which we announced on Friday, is important from multiple angles and helps us achieve several objectives. Firstly, for a very high-value molecule, it establishes certainty of the launch date, and that allows us to plan ahead of time. The litigation overhang goes away, and future legal costs are saved as well. In addition, we also get to share the RAMES program, the Risk Evaluation and Mitigation Strategies program, being operationalized by the innovator, which is mandated by the regulator for this molecule given its profile. All in all, a very good step and in the right direction. Commercials are confidential, hence I wouldn't like to comment on it. I expect this to be a limited competition launch and hence without high price erosion as such. This helps us broaden our US generics portfolio, introduce a meaningful molecule and hence move up the value chain.
Okay, well, switching gears away from Pharma to QSR, Burger King is listed at 115, really representing 100% premium. It's currently at 130, so it's gone up to 116%. Let's go across to my colleague Vinny, who's standing by with some details about the issue that are quite interesting. Over to you, Vinny.
Burger King comes in with a bumper listing, a whopper listing like its burger, and 92% premium was the price at which it opened. 115.35 rupees was the opening price on BSE, which is as against rupees 60 on which was the issue price of the company. Now on NSE, the shares debuted at 112.50 rupees, which is an 87.5% premium over the IPO price. So Burger King has managed to raise 810 crores via this issue. And overall, the IPO was subscribed 157 times during its offering. So very, very good subscription coming in. The listing of premium was better than expected, giving a stellar subscription obviously, and consistent strong revenue growth as well as the store additions over the past a few years has been very good for the company. So all in all, a bumper listing coming in for Burger King IPO, and Overall, the management is also quite optimistic on the growth strategy and story moving forward. So that's something we're going to keep an eye out for.
Okay, Vinny, thanks much for that. Meanwhile, let me bring on board my colleague Jayesh. He's joining us with the latest list of hits and misses in the Indian IPO market.
The action in the primary equity market has been extremely robust in the year 2020. If you have a look at the total value size that IPOs have raised, has exceeded more than $4 billion, out of which the financials have taken more than $3 billion for themselves. You have the consumer space that has raised about nearly $1 billion, and then you have the material space which has raised about $111 million dollars for the year 2020. Also, if you have a look at the IPO performance, the largest IPO that we've had this year has been SBI Cards with a value of about $1.4 billion. But then let me get to the best return that the IPOs have generated at the open price on the listing day. You had Chemcon as well as Happiest Mind and Root Mobile, which all of them doubled for themselves at the opening price. But which have been the worst performing as far as the opening price is concerned. You have the large names like SBI Cards, negative 13% opening. Then you had UTI AMC, which also declined double digit, followed by Angel Broking also, which declined about 10% in trade at the open. Which have been the best IPOs at the end of the listing day. Once again, you have Happiest Minds, which has closed more than double for itself. Root Mobile as well as Rosari Biotech also gained about 75 to 85% each. The worst return on the listing day once again features UTI AMC, Angel Broking and SBI Cards, exactly in reverse order. However, they also closed about 10% lower for themselves on the listing day. Which have been the best returns since listing that we've had. Root Mobile really stands out over here with more than 3 times return that it has already generated for its shareholders, followed by Happiest Minds and Rosari Biotech, more than 90% each. So all in all, 2020 has belonged to 3 sectors, the pharma sector, IT as well as specialty chemicals.
Let's switch gears now. DHFL, the race heats up, and today is the 4th round of bidding. It'll be interesting to see who actually makes a bid, whether Piramal Enterprises will make a bid or not. And we understand from sources that 3 out of the 4 resolution applicants have submitted bids already, and they had done so by 10 a.m. Priyanka Iyer joins in with more.
Whereas 10 a.m. was the bid submission deadline for DHFL today for the 4th round of bids, what we are understanding from the information that is coming in now from sources is that all 4 resolution applicants have submitted the bid for DHFL. Remember, all the bids that will be received today will also be open in today's COC meeting by the lenders, and there were a set of bids that were received on 17th of November, which will also be opened today by the lenders. The better of the 2 bids, according to the COC, will be put up for examination and evaluation, is what the COC had decided on. What we also have to look at is whether Piramal Enterprises has bid for the whole company. This round of bids, of course, was triggered by Adani Enterprises putting in a surprise bid and an offer on 17th November for the entire company, after which the lenders allowed all the bidders to bid for any part of the company and not just stick to whether they had bid for the retail book, for the wholesale book or for the entire company. So we'll have to see if Piramal Enterprises bids for the whole company. We have to see if Piramal is bidding for the whole company, what happens to SC Loy's bid for the wholesale book. All those details basically will be known after the COC meeting happens. After the bids are open, which bids are the bigger bids, the 17th November ones or today's bids, and which are the better in comparison to the other resolution applicants. More details will come in after the COC meeting today.
Okay, Priyanka, we'll let you go on that. Thanks for getting us the latest on DHFL. Slipping into a break, more updates on the other side. Stay tuned.
Okay, hi, welcome back to Buy Now, Sell Now. Let's go across to my colleague Ruchi because there's a lot happening with respect to the pre-budget meetings, and FM Nirmala Sitharaman is meeting industry bodies as part of her pre-budget consultations. The budget that comes in the aftermath of the coronavirus pandemic could see a significant departure from fiscal targets in a bid to push growth. Ruchi Bhatia joins in with more.
The budget preparations have already kick-started, and Finance Minister Nirmala Sitharaman along with her entire team will be meeting and holding consultations at various levels with industry bodies and many other stakeholders as well in the given week. We're given to understand today at 11 a.m. and 3 p.m. Finance Minister Nirmala Sitharaman will be holding 2 meetings with industry bodies virtually, and this basically to understand what should be the budget priorities and some of the key recommendations that will be made by industry chambers. We're given to understand that the budget, of course, is happening in the aftermath of the COVID-19 pandemic, and Finance Minister Nirmala Sitharaman has already indicated that she will not be bogged down by the fiscal deficit target, which means you can expect significant spending in 2 key areas, which is, of course, healthcare, and the second one being infrastructure. Finance Minister Nirmala Sitharaman has indicated just last week that this budget is going to ensure that spending is done in a way that it lays the foundation for the next 4 to 5 years. So you can really expect big spending to happen in this budget. Key recommendations, as I said, will be made by industry chambers. This is going to be an important budget because this will really lay the foundation of the kind of growth trajectory that India will move on post the pandemic.
Thanks, Ruchi, for that. Meanwhile, India's snacking habits underwent a huge change due to COVID-19 pandemic, with packaged branded snacks ruling the roost. The growth is in the consumption numbers of categories like biscuits, noodles bear witness to this. But as the year draws to a close, will we see these trends continue into 2021? Priyanka has a report. Let's take a look.
The pandemic has had an immense impact on consumer habits. Home-cooked food became the first preference, and packaged branded snacks took precedence over street food. In fact, the in-home purchase volumes for biscuits and cookies for the period of March to October 2020 grew 10% year-on-year as compared to 3% in the same period last year. Similarly, in-home purchase volumes of salty snacks grew 13% year-on-year as compared to a sales drop of 4% in 2019. But even as restrictions ease and restaurants open up, the appetite for packaged snacks is expected to stay steady.
Overall, what we are likely to see is that with a significant portion of the remaining year also continuing to be undecided about whether kids will go to school or not, and whether adults will go back to their offices or not, there is going to be a substantial degree of consumption of packet snacks from in-home itself. So therefore, this growth is not really a one-quarter growth, but it's going to be around for some time till we see, ceteris paribus kind of situation when 2019 sort of returns in 2021, hopefully.
The pandemic has impacted consumption habits too. According to a global survey by Mondelez International and the Harris Poll, 66% of Indians are snacking more than before the pandemic. 81% of Indians surveyed believe that snacking will be a part of their new normal even after the pandemic ends. And the current pandemic will have a long-term impact on how we consume snacks as a society.
Pre-COVID, the growth was about, single digit, somewhere around 7-8%. And today the category is growing still at, mid double digits. I'm talking about 15 to 17% growth is there in the category. We feel that we'll continue seeing, double digit and a good double digit. I'm saying 15-17% growth going forward, not just for this year, but at least for one more year, at least, I'm talking about 21-22, FY 21-22. anything in packaged food will continue growing and will continue growing well for the balanced financial year as well as one more financial year to come.
More consumption of snacks and a preference for packet snacks are here to stay well into 2021. While these may not be the best food habits for your waistline, the assured FMCG majors will see a healthy bottom line next year too. Priyanka Iyer in Mumbai for ET Now.
Okay, let's move on and understand what's happening in Motown. Maruti reports have surfaced saying that the company is looking to re-enter the diesel segment once again. Do remember last year, which is April 2019, the chairman of Maruti Suzuki, Mr. R.C. Bhargav, had announced the company wanting to phase out the diesel vehicles because of the pricing impact, especially that the small and medium level cars would see on the back of the BS6 shift. So this year, as when the BS6 started rolling out, April 1st onwards, they phased out. Before that, in fact, they had already phased out diesel. Now what we understand from reports is that the diesel vertical still continues to draw a fair amount of customer traction, especially in the high-selling SUV segment. So perhaps that's the reason why they want to come back once again. And what we're picking up from reports is that Maruti has already started upgrading the Manesar plant. And this was the one which was earlier churning out BS4 vehicles of 1500cc diesel engines. So yeah, they use this powertrain in models like Ertiga, Ciaz and other models, however, were using Fiat-sourced diesel units. But yes, given that the key rivals like Hyundai still continues to do very well in the diesel SUV segment, Kia is doing very well, Seltos and Sonet both are witnessing a strong demand. Perhaps that is why Maruti also seems to be re-evaluating their entry or their comeback in the diesel segment, given the clients and the customer traction that it's continues to see. Because last year also, when they said they want to phase out the diesel vehicles, they did keep it open that okay, once BS6 shift happens, we will evaluate if there's even enough demand in this business, and we perhaps could look at this. In fact, earlier this year, back in the month of June, July, Mr. Shashank Srivastav also hinted at the company wanting to come back and evaluating the demand scenario, especially in sedans and SUV segment. And perhaps if this does happen, then they could be looking at mid next year or by festive season next year to roll out diesel vehicles from their Manesar unit. But for now, this is an update that we're picking up, which is purely reports based. The stock is down about 1% in trade as we speak. But yes, an important development for sure to watch out for.
Okay, thanks for that, Karanya. Let's, as we wind down, let's take a look at the BNSN quiz question and answer this morning. We asked you, which of the following pharma companies have the highest TTM EBITDA margins? Your options were Survein Pharma, Divi's Labs, Loris Labs and Dr. Reddy's. While we had a lot of participants that guessed Divi's Labs, that's actually not the right answer. If you look at TTM margins, Survein is currently the one which has the highest margins in the pack, well in excess of 40%. So we have a few guys who got it right. Sham Mohan and Amarjeet Kanchanwar, both of you got it right, so congratulations to you. Please keep tweeting to us on the ET Now handle, and if you are correct, you will be featured on our channel at 11:45 or 11:50 on a daily basis. With that being said, let's now move on ahead, and entrepreneurial lessons for women are in focus. Women entrepreneurs or women-led startups are few and far between. There are a variety of reasons for the same, from gender bias, labeling of women as primary caregivers, etc. But that's now changing. More women are entering the entrepreneurial world and the landscape is changing drastically too. On The Money Show, we brought on board 4 entrepreneurs who have made a mark, grown their businesses and are promoting women entrepreneurs. They're sharing their life lessons and their experiences and their wisdom. So we have Archana Khosla Burman, founder and partner at Vertices Partners. We have Swati Bhargava, who's the co-founder of Cash Karo and Earn Karo. We have Bhavna Janeja, who's the co-founder at Empowered, and Tanvi Malik, who's the co-founder of High Street Essentials. They all joined my colleague Mobina Kapasi on this very special panel. Let's get you a slice of that conversation.
One of the most commonly asked questions which are asked is that if investors look at gender, And, what I tell them is that while I don't take away the fact that there may be an unconscious bias which exists even today, as there are many women founders who have felt the commitment to their venture questioned by being asked personal questions on marriage, children, work-life balance, etc. But given my interaction with some pedigreed investors, I would like to believe that for a large part of the investors community, it is really the person who matters and not the gender. Does the person really understand the problem they're trying to solve? Have you put an innovative product? Can you scale it? Can you generate revenues? Can there be market penetration? Is there understanding of the customers? What is your team? It's mainly these factors which the investors really look at. And to my mind, it is typically a very gender agnostic thinking that happens, because at the end of the day, the investors also have to look at their IRR and the return on capital, and gender doesn't ascertain that. But I do strongly believe that half the battle is lost if you are thinking too much that you will be judged based on your gender, as that will determine the way you will be presenting the pitch. And if the investor doesn't see confidence in you for your own venture, it'll be a little difficult to expect them to have confidence in you. So I always tell them to start by overcoming this feeling when going for a pitch to an investor. The other very common question which is asked is how to be fundraise ready, or what is the right time to raise funds. And simply put, I answer by saying that first and foremost, you have to ascertain whether a fundraise is required at all or not, as that's a very strategic decision, and it's not necessary that every venture needs funding. There are enough and more ventures we are aware of who are doing well, who have been bootstrapped as well. So that's a strategic decision which needs to be taken. The right time to raise capital will be as unique to you as your business plan and the products that you offer. So those need to be factored accordingly. And I think depending on the stage of your venture, you also need to determine as to what kind of capital you're looking at. So if you're at the POC or MVP stage, then you're looking at seed capital. If your business has reached a product market fit, then you're really looking at venture capital. And if your business has reached exceptional traction and you're looking at, expanding to international markets, or for that matter, fighting competitors, then you're looking at growth capital. The other important